All right, yeah. While they're coming up, I'll introduce everybody. So we have Matt here, CEO of Strive Asset Management. Tracy, you just heard remarks from, who's Chief of Staff at Kraken and Head of Strategic Initiatives, and Alexandre, who's Deputy CEO and Director of Bitcoin Strategy at Capital B, formerly known as the Blockchain Group, now Capital B. And yeah, so we're going to tee it off here with, I'm excited about this panel because I think we have some really interesting perspectives about institutional trends. And I want to tee it off with Tracy from your vantage point at Kraken. What are you seeing now that's happening with institutional adoption, institutional trends that is different from the past?
Okay, so in the past, what we've seen, right, is companies like Strategy. And more passively, we've seen companies that have been accumulating Bitcoin or accepting Bitcoin. For example, like some years ago, AT&T was accepting Bitcoin as payments, but they really didn't know what they were doing, right? They just were accepting Bitcoin. Now we're seeing companies come in and acquire Bitcoin. They're establishing treasuries, whether it's in a passive manner, and that is by accepting Bitcoin payments, or whether they're being bullish about it by buying Bitcoin directly. The one thing that I am seeing is that obviously this, companies that are accepting the Bitcoin strategy, they will be leading into the future, this movement. But the one thing that I'm seeing is a lot of companies that are attempting to do the strategy are not necessarily being guided properly into doing it. So what I'm seeing, and I'm concerned, we don't give financial advice to companies or anything. We're a service provider. But one of the things that I do with my clients is that I always try and put them together with an expert in the field, because I can see companies that are acquiring Bitcoin, they're getting over leveraged, they're not necessarily very well educated into like what Bitcoin is, how to utilize it, how do you use Bitcoin to your favor, right? There's a million things that you can do with your Bitcoin. You can borrow against your Bitcoin, you can lend your Bitcoin, you can do a million things with it. It's not just holding it, but you also as a company have to be prepared on how are you going to maneuver the bear market, because at some point there will be a bear market. And so if you are getting over leveraged, you don't want to be in a position as a company, once the bear market hits, to be in a position where you're going to have to sell your Bitcoin, because the whole point is to keep your Bitcoin and go along with it. So that's one of the trends that I'm seeing is a lot of companies getting into this, but not having the Bitcoin education, which is why Bitcoin for Corporations is such a great organization, because it helps these companies get that education that they need in order for them not to be in trouble once they start acquiring a significant amount of Bitcoin.
Okay, that was great for what I want to get into next here with Alexandre. Okay, so companies can get into trouble in a bear market, and there are ways, evolving instruments for institutions to help mitigate those risks. And you guys pioneered Bitcoin-denominated convertible notes. So could you tell us about what are the benefits of that? Why did you do that? And what do you think are the advantages for a bear market scenario?
Yeah, so Capital B is Europe's first Bitcoin treasury company. We launched back in November 2024. And I would like to highlight different phases that we've come to know with Bitcoin treasury companies. The first one, of course, is strategy. They have innovated and created this whole model. At the beginning, it was just to raise capital and accumulate Bitcoin on the balance sheet with the access for institutional investors and retail investors to Bitcoin itself in a securitized manner. And then strategy, with the launch of the ETFs, discovered that actually it's as well an offensive strategy when you go and raise capital on accretive conditions and you're able to increase the number of Bitcoin per share over time. And in that way, strategy was able to do 3,000% performance over 5 years, while Bitcoin was up 1,000%. And through this, then there was a new phase with new Bitcoin treasuries, with Metaplanet, huge outperformance of Bitcoin as well, over in Asia, and with Capital B launching with an outperformance of Bitcoin as well. And that is due to an innovation in the terms of the financial instruments that can be issued, we have created the first Bitcoin-denominated convertible bonds, and that consists in a 5-year duration subscribed in Bitcoin with a premium to the market price of 30% and an ability for the investors to get the best of Bitcoin or the convertible aspect into the share of the company. And in that way, we were able to increase the number of Bitcoin per share of the company by 1,500% year to date. So that gives you an example of the value that the company can provide you. Over 6 months, for example, Bitcoin will be up by maybe 40%, and the company is up by 400, 600%. And since the launch of the strategy, Bitcoin is up maybe 80%, the company is up by 1,000 and was up by 3,000%. So I would like to say that yes, you can provide value with financial instrument to investors, but what is important is the long-term time horizon. It's a 5-year time horizon, and this way you are protected as a company against a 1 to 2 year short bear markets that can really threaten the long-term accumulation play of a Bitcoin treasury company. So in that way, I think that the long-term accumulation of Bitcoin is extremely important and should be prioritized by Bitcoin treasury companies instead of short-term instruments. But still, we see also a trend of some short-term practices that can be interesting for some companies.
Yeah, at Smarter Web, we have been inspired by the Bitcoin-denominated convertible notes and have launched our own Smarter Convert version of what you guys pioneered. And we think it's exciting for, we think it's a better instrument for raising capital with a debt structure versus, a traditional ordinary bond because of some of the protections in a bear market scenario. And I think that this is just the beginning of ways in which Bitcoin treasury companies will innovate in terms of their evolving instruments. And so Matt, I want to talk to you about what you are seeing at Strive with regard to what your focus is on now, looking forward in terms of innovative, evolving instruments for how you guys are going to be raising capital.
Yeah. So first to start off, where are we in the Bitcoin cycle for corporations? We are in the digital gold rush era, as Michael Saylor talks about. And so the perspective is for us, over the next 10 to 15 years during this gold rush era, how do you maximize Bitcoin holdings and increase Bitcoin per share for the holders over that period of time to outperform Bitcoin? The whole strategy needs to outperform Bitcoin or it doesn't make any sense. And so right now, we're in the process of closing a reverse merger, starting to buy, nearly $1 billion of Bitcoin, about 700 million to start us off, and we have no debt. And so as you think about this structure, we're thinking about it as a perpetual structure. So we got offered convertible notes like everybody else, and obviously both of you on this panel chose different routes to go with convertible notes to many of the other competitors. What we saw initially at the time back in May was converts that would have potentially put our company at risk in downward scenarios. We didn't like the risk that those would have put on our corporate balance sheet, so we turned them down, right? And where the market has gone broadly with strategy leading is perpetual preferred equity instruments, right? Instruments that you never have to pay back the principal, where if you just rewind back to May, and you think about how fast this space evolves, back in May, when you looked at Strategy's balance sheet, the conversation was how do they manage their laddered maturity schedule? How much debt is owed each year? Well, smaller treasury companies don't even have the balance sheet to have a laddered maturity schedule. They're looking at a bullet, which means in 1 year, they're likely to have to pay back all of their debt with convertible note instruments or typical debt instruments, which might work out great. Or, if the market is not your friend and that happens to be in a bear market, you might be at risk. Right, the perpetual equity instrument is designed for a perpetual trade about fiat devaluation that will happen perpetually. I think all of us that are Bitcoin treasury companies and all in that direction believe this is a perpetual devaluation of fiat currencies. So you want perpetual leverage and you want the ability to perpetually buy Bitcoin and outperform Bitcoin.
So a follow-up question on that. How do you view, the sources of capital for Bitcoin treasury companies broadly? Is it going to be mostly fixed income? Is it going to be coming from the equity markets? Is it going to be money market? How do you view it?
Every company is going to have to find their own distinct path that they're going to have. Some companies are going to be able to raise a ton of capital, which then is going to open up big fixed income markets for them. For others, it might be using their profits to put that money into Bitcoin. And this kind of gets into one of the questions that we were talking about before this started today, which was, you hear so many people say, is it too late? And you look at it and said, less than 2% of companies own Bitcoin today. Why does Bitcoin for corporations exist? Why is, we're all running Bitcoin treasury companies, but it's not competitive. We're trying to help each other win because it's so early. And we don't want each other to blow up because that would actually be bad for the market at this point. So we're trying to help people deploy, the best instruments with the knowledge that everyone will have a distinct strategy. Y'all have Bitcoin-denominated convertible notes, strategies going all on prefs. Nakamoto's kind of doing the Bitcoin squared strategy, launching international companies. Some companies will just be profitable operating companies. And that is distinct. Everybody has to say, what is my competitive advantage? And if you think about it at the individual level, would you ever tell one of your friends it's too late to buy Bitcoin? Absolutely not. It's not. This is a perpetual investment.
I want to emphasize just like a very simple part of this. A lot of these financial instruments, sometimes it can be very complicated. They can be, very out there. But I have this wonderful client, and they're very heavy on their cash flow. And they have a lot of cash coming in. And his main concern was that with, for example, all of the wars and with the amount of money being printed to fund all of these things, our cash is being eaten up by inflation. And so he, who is actually very new to Bitcoin, started researching this topic, and he's just like, I gotta put my money in this, because what's gonna happen if they keep printing? What's gonna happen when all of this stuff continues and my money's gonna get eaten up? So he thinks he needs to think of ways of just like saving his company, but also his employees. And the way to do that is by protecting your cash, not all of it, right? But you allocate a significant portion of it into Bitcoin, and you make sure that you start your treasury that way. So you don't necessarily have to like all start like with the convertible notes and with like massive debt issuance, right? Like you can just start with a little bit of your cash, right? 20% of it, buy your Bitcoin and start stacking it. And I just want to say that because everyone, when it comes to like the Bitcoin for corporations and the balance sheets, everybody gets lost in the financial instruments, but there are so many ways of starting your own Bitcoin reserve in passive ways as well. There are companies, for example, like Steak and Shake, and one of the ways that they start their own treasury is by accepting Bitcoin as payment. So there's multiple ways of doing this. Just don't get overwhelmed if that's, like, I'm one of those people that gets very overwhelmed when things start getting very complicated, but it can actually be very simple.
That's a great point. And it strikes me that 5 years ago, Michael Saylor was trying to solve a specific problem, right? He had this melting ice cube of a balance sheet. And so he figured out, Bitcoin's the thing I should store my value in. And that started as just a Bitcoin treasury and turned into a active Bitcoin treasury strategy where, I think there is this distinction we don't clarify enough of. Like, there are companies who are storing value in Bitcoin, and that's probably the vast majority, and especially who are coming. And then there's companies like, the rest of us up here on this panel who are actively trying to provide Bitcoin yield through capital market tools. So Tracy, to follow up on that, like, can you provide any more color on, does it feel like more broadly corporates are waking up to the MicroStrategy problem of 5 years ago? And, is that what you're seeing a lot more inbound on, for how to solve this problem?
Maybe these guys can help me out, but I'm seeing a lot of corporations, one, they don't want their cash eaten up. They want to make sure that their reserves are safe. And also, like, it makes sense to them to put money in Bitcoin because, granted, regardless of whatever bear market hits, we're watching that the price of Bitcoin continuously keeps going up. And then when the bear market hits, when it goes down, it's not as down as it used to before, right? If that makes sense. But so one of the things that I'm seeing is, of course, so acquiring Bitcoin, putting it on their balance sheet, but I'm also watching a lot of companies who, for example, their boards are not approving buying Bitcoin. Well, then they're putting money in companies that have exposure to Bitcoin, because maybe it is a hedge in a way. I don't think it's the most sophisticated hedge, but that's okay. It's how people start getting into Bitcoin in maybe the less riskier way for them. It's hard to convince your board to buy Bitcoin sometimes, depending on who you are as a company. But it may not be hard to convince your board to invest in a company that has a cool product that also happens to have a Bitcoin treasury.
It's definitely something we don't talk enough about, that in a funny way, Bitcoin treasury companies make it easier to get access to Bitcoin exposure for companies that don't want to hold Bitcoin themselves. So, Alexandre, I want to get your thoughts on, where do you see things moving? Like, what trends do you think we will be talking about 6 months from now, 12 months from now, in terms of institutional adoption for broadly, or instruments for Bitcoin treasury companies?
So I think we are extremely early, and that Bitcoin treasury companies can provide the best risk-adjusted returns, and that over time, Bitcoin treasuries will become the most valuable companies in the world. In terms of trend, there are broader terms and very short-term trends. In terms of the broad trend, I would say that you have a realization that Bitcoin is at least digital gold, and in this sense that Bitcoin has now a price that is a 90% discount on what the value of Bitcoin would be if it would be digital gold, meaning that it would be a 10, 20 trillion market cap asset. And in this sense, you have this digital gold that Matt was referring to. And you have banks that 85% of systemic banks in Europe and North America, and I would assume in Asia as well, would have already been prepared now to offer digital asset custody and trading capabilities for their clients. And so there is more access to Bitcoin itself to be expected. In terms of corporations, it's less than 5% of publicly listed companies that are still thinking about adding Bitcoin to the balance sheet. And I would say that, as Tracy said, we are so early, and any corporation can start to add a bit of Bitcoin to its balance sheet. And in this way, the companies that have the most Bitcoin would also benefit from this trend of more corporations adding Bitcoin to the balance sheet. And in terms of then outperforming Bitcoin and outperforming the sector of Bitcoin treasury companies, well, those can be the companies that are performing and executing the strategy of increasing the number of Bitcoin per share the fastest and the strongest and in the most sustainable way in the long-term time horizon. And we are positioning for this. Our objective is to always find the best conditions in the market with institutions to raise capital at accretive terms, at premiums, and with a view of building the most solid balance sheet over the time and to have the most options over time. So I think what we will see is a lot of companies that want to take inspiration from strategy in terms of the preferred instruments and what that can mean in each jurisdiction. I think there is a lot of value with a Bitcoin treasury company for investors to have no tax consequences when trading a Bitcoin treasury company compared with Bitcoin itself. There is a lot of value in a Bitcoin treasury company being able to provide a 10% type of return for fixed income investors when in the market they can only get 3 to 5%. And there is a lot of value in a Bitcoin treasury company being able to provide peace of mind for Bitcoin investors that have a lot of Bitcoin and that want to have a small portion of their Bitcoin stack into a Bitcoin treasury company under a securitization vehicle that the Bitcoin treasury company provides. And there is a lot of value in knowing that your Bitcoin treasury company has this long-term time horizon of basically buying more Bitcoin for you, while you can wait and sit back and see this Bitcoin treasury company accrue value over time for you.
Yeah, great summary there. And I think another topic, if we do have time for it, is the regulatory environment and how that impacts institutional trends and climate. And it's interesting. So, Matt, Strive was founded by Vivek Ramaswamy, and Tracy, you've gained the moniker of the woman who orange-pilled Trump. I don't know if you if you claim that or if people have put that on you, but.
A little bit of both.
A little bit of both, all right. And so I think it's very interesting in the US context how there seems to have been a shift in regulatory and political willingness to engage with and support Bitcoin in particular. And I guess, how do you view that impacting institutional trends now and going forward? Tracy, if you want to start.
Well, you're welcome. One.
Thank you very much.
You know, as an exchange, and we've definitely not been the only ones, there's been a lot of battling that we've been doing for the last 4 years, because the regulatory landscape was just so hostile. Now, what we're seeing is a lot of room to breathe, a lot of room for innovation, and a lot of room for grifts, let's be real, right? When the market is up, the grifters are out. That's the reality of it. It's true. It's why we love the bear markets, because it clears out the stuff that doesn't matter. What I'm seeing is companies taking more risk with the Bitcoin strategy, right? By having a reserve. Before, the very few people that were doing this, obviously strategy, but it was more the people that have been in the industry for a very long time. So David Bailey, Alexander, people that have known Bitcoin, people that are native to Bitcoin. They were the ones doing the reserves, right? Now we're watching this massive movement, given the political landscape, the fact that the regulators are sort of backing off from like the regulation by enforcement, that companies are willing to explore, okay, what does this thing look like? But, and the one thing, and I just want to go back to one point, the one thing that I will say about this is companies that do not establish a Bitcoin reserve at some point, and I'm not saying you have to have like 30,000 Bitcoin, like let's be real, everyone is different, every company is different. But those who don't adapt will be left behind. And if you've been a Bitcoiner for a while, or if you are a maxi, or if you have maxi friends, one of the things that your friends are saying and have been saying for a while is that there is a monetary debasement happening worldwide. So how are you going to protect your company? If this thing happens, right, maybe it's a conspiracy theory. Maybe you think we're all crazy, but you don't, because you're here. You're sitting down with us having this conversation. But when this happens, how do you protect your company? What are you going to do? And that's where Bitcoin comes in. So that's what I do tell people. It's, if you don't get on this train, you will be left behind as a company.
That's fantastic. Matt, any final comments with our final minute here?
Yeah, so for the last 10 years, if you asked institutional investors what the biggest risk to Bitcoin was, it was regulation. That risk has been completely wiped off the table. Obviously, Tracy played a role. I think Trump's speech in Nashville a couple of years ago called out David Bailey's contributions, called out our co-founder Vivek's contributions. There was a lot of people that did a lot of work to try to completely remove the deregulation risk. And the markets are going to take a lot of time to adjust to that major shift in what has happened. And as that major shift has happened, I do think that you're going to start to see Wall Street come in a major way, and you know, you have this clash in the sense that you have the native Bitcoiners that understand Bitcoin more than anybody else. But then you have Wall Street that understands fixed income, investment banking, all these different things that have now, some of them have wanted to be involved, but they can't, and now they are in. And they're more sophisticated in that area, and so there needs to be, you know, a marriage. And there's this conversation of suit coiners versus hoodies.
Well, my view is that both of them are great, and they're both great, and they need to work together, and I don't see there to be any sort of systemic risk. Yes, there's some grifters. Yes, there's some people that have taken some very bad debt terms, but then when you look at the size of this, and you compare that to any random weekend leveraged wipeout on Binance or OKX, and you're just like, there's no risk here right now. Like, it might get to that point, but like, we're really, really early days, and there's a lot of room for expansion from here.
I think that's a perfect place to end it. Thank you very much for this panel, and happy birthday, Tracy.